Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. We have no new all-time high this week. What the deuce? I'm not used to that. So we kind of fell out of bed here on Friday of last week. We're caught here by the 50-day moving average, went up, hit it, and then coming back down. So it's looking like it's going to be caught here by the 50-day moving average for next week as well. My bias would be up for next week for the S&P 500. And the dollar, the DXY, is down 0.3% for the week. So we thought last week that it was probably going to angle down, thought it would have hit down here closer to Tuesday, Wednesday of next week for the bounce. Took all the way to Friday, then had a really nice reversal bar here. So it looks like the DXY is going to gain some strength here in comparison to other currencies, which should put some downward pressure on a lot of the commodities that we're invested in. And M2 money supply continues to go up. Why wouldn't it? Increase that money supply and bring in the helicopter money after that. And the 10-year yield is down 1.2% compared to last week. So I adjusted this trend line here a little bit. We were hitting on different points and we basically just broke through it. So now we got a new trend line here. Looking to me like we're probably going, we did have a nice reversal bar there on Friday, but I would say generally speaking, until this downtrend line is broken, we're probably heading down on the 10-year yield. And if we zoom in here, you can kind of see there's some back support right back here. And with this new trend line, it looks like it could go down to about 3.9% next week. We'll see if that happens or not. Excuse me. But basically what this is telling us is over the last week, people have been buying bonds because they're afraid of what's happening with the stock market. This is a pretty bearish looking chart as far as yield here, which means that more people are buying into them. Same thing here for the 30-year. I kept the same trend line that we had with the 10 just so you could see the difference and how it's broken through that. So next level of support here for the 30-year will be around 4.4%, somewhere in that ballpark, 4.45. But I would expect this to kind of retrace down as more people buy into bonds. And the VIX is down 4.1% compared to last week. Had really volatile though. Look at it. Look at how it's not looking like the EKG. It's looking like we just shocked that corpse and it's starting to get a heartbeat. So the market is starting to perk up. And basically the way you can read this is as we start to get spikes like this, the market is afraid. And so the more fear that comes into the market, the more we get excited as speculators because that is our opportunity to make some money. And gold is up 5.3% for the week. We have a new all-time high, 4,392 on the futures market and 4,379 on the spot market. Pretty exciting. We are in a little bit of backwardation here with gold. So I think that's kind of forecasting a little bit of a downturn here. Excuse me. We are in a little bit of backwardation here with gold, also with silver as well, meaning that the spot price is more expensive than the futures price, which is kind of odd. Bearish engulfing here on the spot price, bearish engulfing here on the futures price, which is a pretty bearish pattern, meaning that I think we're kind of in an interim peak here. And another little, forecaster, I guess is what you could call it, is that basically the GDX and GDXJ and a lot of the gold miners, they're starting to kind of roll over, which is usually an early indication of what's going to happen to the metal itself. The miners, I think, are leading right now. All right, and gold divided by the S&P 500, gold outperformed by 3.6% last week. So this is kind of interesting. It looks like it's making kind of a neat little cup pattern here. We'll see if this irons out to be a cup and handle, but definitely falling in the category where it could. You see how it's got this kind of cupish pattern right here? We'll see if we iron out and get some kind of handle. And then after that, if it does, if I could write the script, I would like it to do that. Then we'll get some measured upside targets and go from there. PHYS is up 5% for the week. So for the new guys to the show, this is where you want to start if you're going to invest in some gold, in my opinion. And basically what this is this is physical gold on the stock market. So you're buying into shares of bars of gold sitting in a warehouse. Thank you, Sprott. And the way we read this, we got the red, yellow, and green lines right here. And see how we got the 15%, 35%, and 50%. Let's say you wanted to take a position in this. I would recommend placing 15% of your bet as a limit order on $28 and 35% of your bet as a limit order on $26.40 and 50% of your bet, like the final half of it, on $25. I might need to raise these up a little bit, but I'm pretty confident that I think gold is going to have a retrace here, and I think these levels will get hit. At least I hope they do. All right, and GDX is up 3.9% for the week. So see, this is kind of what I'm talking about. Gold was up over 5%, but the miners, the leverage bet on that wasn't even up 4%. So they're not up as much, right? So I think that's kind of forecasting what the commodity is about to do. We'll see. We'll find out next week. So we've also got some negative divergence here. So people that have taken the TA course, you know exactly what I'm talking about. Right here, look down at the RSI, and we can see this RSI right here. Just look at this number over here on the daily here. Is at 81, right? And then this next peak over here is at 74, forecasting that the RSI is moving down, although the price was moving up. So usually this forecasts what the price action is going to do in the future. And Ronnie says, just finished listening. This is gold. Yes, it is, Ronnie. Look at this. We're right on gold. Lots to think about. He says, your technical analysis class is enticing. Well, Ronnie, if you need a little encouragement here, Fred says, I took your course on technical analysis. I had to repeat the course over and over, not because the course was bad, but because I was not as advanced in chart analysis as you. I took 1 month of your premium service to see if I could comprehend what you do. I'm not there yet, but I will subscribe for a year because I believe you know what you're doing. I have bought the tips that you have shared in your online podcast and YouTube, and I am up 45% this year. I'm a 72-year-old construction worker, and your tips are close to life-changing. I'm in it to win it. I will follow your advice and think you will make my life better. You know, you're going to make your life better, Fred. I am honored that I get to play any small part in that, but thank you for the support. I'm glad to be here, and I love hearing stories like that. This is one of the most fulfilling things that comes from doing this, and the reason why I do it, so thank you. So, Ronnie, if you are interested, the technical analysis course, if we go here to the website, stevebartonmoney.com, on the homepage right here, technical analysis for beginners, click that, claim here, boom, that's right where it is. We are going to have a sale, a spooktacular sale, because we've got Halloween coming up here at the end of the month. Last week of the month, we're going to have a little sale on our TA series and for the premium Substack. So if you want to wait for that, good on you. If not, then that's okay too. Would love to have you. But this TA course, I think, is helping a lot of people. I can tell by the comments that I'm getting that I think it's doing a lot of people a lot of good. So I'm thank you for sharing, Fred and Ronnie. All right, and GDXJ is up 3.2% for the week. So look at how far that fell out of bed right there. So on Thursday, looked like all systems were go, and then boom, just dropped out of bed. And so did a lot of these other equities. Also some negative divergence here. Okay, so RSI right here. So we can see RSI over here, 82. Then we got 79, then we got 77, here we got 74. So it is starting to roll over. It's looking to me like we are probably going to get some weakness here in the gold stocks. All right, and silver is up 6.1% for the week, so pretty incredible. New all-time highs in silver, $53.77 on the futures. And on the spot market, $54.49. So still in backwardation here on the on silver, meaning that the spot price is more expensive than the futures price, which is kind of odd when you think about it, right? Like silver should be more expensive in the future because there's all things like cost of carry. Insurance. You know, if you're not going to take delivery of this stuff for another month, you have to store it somewhere. You got to pay someone to watch it for you to make sure it doesn't get stolen. The futures price should be more expensive, but people are paying more for it right now to get it now. So pretty exciting. And everything that's going on over in London right now, we can pick Lobo Tigre's brain on that. We're having him on the show next week, so be sure to get your questions in. All right, and what do we got here? Here is showing the backwardation. So I brought this up on with Elijah on Liberty and Finance last week. Pretty exciting here. So this is how we can plot backwardation. Basically, as this heartbeat looks like, I can spread it out a little bit here to make it a little bit bigger for you. Boom, there we go. Now, as this goes up, what it's showing is that the price is in contango. And as it goes down here to the bottom of the chart below this white line, this is in backwardation. So look at how far skewed backwardation got here. The last time we saw backwardation like at this extreme, at least in a dollar amount, was back in 1979 and 1980 when we had that blow off top. So I would be curious to see if this spread kind of widens. And so far, it looking very convincing. You know, I think we might be in an interim peak here, but I don't know, but it is a compelling chart. All right, so gold divided by silver, so the GSR, the gold to silver ratio, is gold underperformed silver by 0.7% for the week. So this is one of those things that kind of tells me that the bull market is not over. Okay, so you can still 1 ounce of gold will still get you 84 ounces of silver. And usually when you have these blow off tops, see like this one in 2011, it got all the way down to 30 to 1. Okay, so I think we got a long ways to go, although we may be in an interim peak here in the price right now. I do not think that the bull market is over. So that answered like 7 questions all in one there. Okay, PSLV, so this is your physical silver on the stock market, is up 3.9% for the week. So new guys, if you want to get into silver, I would recommend starting with the physical first, not with the miners. I don't see any buys right now with any gold or silver miners. I want to see, I want to see them come back down to these red, yellow, and green lines that we've had drawn down here forever. But anyways, if you want to and you're trigger happy and you can't wait, this is where I would start, and at least you'll get your foot in the door. Okay. And SIL is up 4.1% for the week. So also have some negative divergence here. See, look at the RSI right up here, getting pretty high, 82. And then over here we got around, what is that, 75. And then over here we got 75.7. Yeah, this one was slightly higher. So looking like we're finally going to get some rollover here in some of these gold and silver equities. SILJ up 5.9% for the week. Also have some negative divergence here on the RSI in SILJ, the Junior Silver Miners ETF. Although the price is going up, the RSI is going down, forecasting that it's probably going down as well. And Kelly says, love what you do. I've been writing the coattails of the great minds in the precious metals, copper, and uranium, names like Eric Sprott, Rick Rule, and Lobo Tigre. Now you're on my radar as one of the best too. Well, I'm honored to just be in the same sentence of those guys. I'm close to becoming a paying member, but awaiting an upcoming raise. Anyways, just wanted to say thank you for being a conduit for Rick Rule's classrooms, and especially sharing information and lessons. You're welcome, Kelly. Thanks for being here. If you need a little bit more encouragement, this is what Bill has said of the premium service. He says, absolutely great. I really appreciate the extra clips for premium members. George says, love the premium interviews. And Jay says, I appreciate the investment and financial analysis. Keep up the good work. Thank you, guys. Thank you, Kelly. Remember, we got the Spooktacular sale coming up at the end of the month, so you might be able to get in just a skosh a little cheaper. All right, moving on to copper. Copper paging. Dr. Copper is up 1.5% for the week. So absolutely fantastic for copper investors. Before I pull any triggers on this, I'd still want to see this kind of come back down. I think the recession is not really priced in any of this yet. I think we still got some weakness here, and we could pick up some of these copper stocks a little bit cheaper. COPX is up 1.1% for the week, so getting really stretched here. hindsight being 2020, the time to sell would have been up here at the top. I am going to have to, whoops, undo that. Don't get that line out of there. There we go. I am going to have to sell out of this. Just premium subscribers know why. I think I'll probably be doing that next week. I mean, we have had an amazing run in this fund since Liberation Day. I mean, look at that bottom one right down there up to where we are. 90% since Liberation Day, since April, when Trump held up his chalkboard of all the tariffs he's gonna run on everybody. So I think it might be, for me, I personally have to sell out of this one and then buy back in. And I'm probably going to do that next week. Same thing here for COPJ, up 2.1% for the week. I'm going to have to selling out of this one as well. Although I do like limit orders. See this kind of upward channel trend line right here? Lines up pretty well with the spot price. See, same thing, green arrow. I even made it the same color, so it's super easy to follow. So I like limit orders down there, or $30, 27, and 25.50. And uranium is the spot price is down 2.4% for the week. So looks like it's following that pattern that we drew, and that white line came back down here to the green line right there. So the next part of the pattern would be, it should be up next week. We'll see. That's my guess. My guess is it'll be up next week. SRUUF is down 1.25%, so 1.25% since last week. Had a really nice sell-off here on Thursday and Friday. Kind of came in for a quasi little double bottom right there, caught by the 50-day moving average. I don't really see any buys in this right now. There's not much of a discount. If you have no uranium, this is exactly where I would start. I would not be getting into the uranium equities right now, such as URNM. Oh, and the Sprott Physical Uranium Trust, there was no pounds added this week or anything. They've been buying uranium up hand over fist lately, but this week they did not buy any. All right, so URNM. So if you only got one ticker to invest in uranium, this is the one that I would do it, because about 15% of it is that Sprott Physical Uranium Trust. Another 15% is Cameco, and another 15% is the Kazatomprom. So about half of this fund right here, this ETF, is in the big boys, right? And then the other half is kind of in the juniors that give you that real leverage. This one's down 3.3% for the week. So really nice profits here in URNM. And, it's nothing scientific. All we're doing is we're just using technical analysis to buy in here when nobody cares, and red arrows sell up here when everyone does care, right? You got to have someone to sell it to, right? Everyone wants to sell it to you here, so you buy it, and everyone wants to buy it from you here, so you sell it to them up there, right? Like this one a lot, but I want to see a pretty good retracement on this, at least to the 50-day moving average, before I'd entertain any kind of idea of buying. And URNJ down 2.6% for the week. This one's also had a really nice run up. I'm personally out of this fund right now, but I would become very interested again if we got back down here somewhere around this green line, or even better down around these red, yellow, and green entry points down here. And speaking of which, let's see. Oh, after this comes out, the Just a Human interview will come out, so you guys have already seen that. Digging for Gold. I like the screen name. It says, out of curiosity, why do we sell portions of a portfolio at certain target prices versus using trailing stops placed at slightly below those target prices? Okay, so basically, what Digging for Gold is asking is why do I put, okay, this is about where I'm going to get out, instead of having a trailing stop loss. So what you could do is you could say, okay, once it gets up to, we'll just say $30 here for URNJ, what I'm going to do is I'm going to put in a trailing stop loss. This is something that Lil Boutigre talks about, right? It says, okay, once it gets up to $30 here, then I'll say that at 5%, if it drops 5% in a day, have a trailing stop loss, then it'll instantly sell and I'll be out. I think that's fine. And, maybe that is for most people. I know most of you guys have jobs and lives, and you can't be staring at a screen all day. For me personally, I like staring at the screen all day, and I like seeing these, and I wouldn't be shaken out by something like this, but a stop loss would. So I prefer to be actively there and watching it. And, maybe I could put on trailing stops like that because, I mean, there are days where I'm in the car or something and I'm not in front of the screen and I might miss it. But for me, I personally just like to be in front of the screen and watch the price action. And especially, in the moment, you don't necessarily, when this comes in, you can be looking down here at the 30-minute and see the price action, or I can even get into the 5-minute, the 2-minute, where each bar is 1 or 2 minutes worth of action, and it can really give you an idea of like what's happening and really get your pulse on the market of that time. But yeah, I got nothing wrong, nothing against trailing stop losses, and maybe they are for most people. They're just not for me. All right, I hope that helps. And crude oil is down 3% for the week. So we had finally got through. So remember, we were looking at this little line right here. I think it was at 59. Oh, I could just look at it right up here. It was at 59.74. Broke through that. Closed convincingly below it. Had a pretty bullish reversal bar right here. See if I get rid of the volume right here. You can see it better. See, when you get like one that looks like a cross where the entry, what do you call it? The opening and the close of the market are kind of in the top like quarter or 20% right there. That's a pretty bullish looking bar. So it looks like it might move up on Monday. The one thing that would kind of make me hesitant on that is most of your support is right back here, just north of $55, where I've got the white line drawn. So I'm feeling pretty good that I think oil's probably got a little bit more weakness in it. And there is actually a technical case for this getting down into the 40s, which I would absolutely welcome because it will make some of the oil equities that we've been eyeing and the oil companies extremely cheap. XLE, our favorite oil ETF, is up 0.9% for the week. So came in right here, blew through the 87.25 level and almost hit the 84.50. I think if you're patient, this 84.50 will hit, although now is probably fine as a buy. But if I'm right and WTI gets cheaper, we'll probably even get down here to the 81 level on the green line. All right, and natural gas is down 3.2% for the week. So had a nice little bounce right here. I drew this trend line, so you need 3 points to make a trend line. Got one right there. Another one right here on September 23rd, and one right there on Friday. So almost a perfect little triple bottom right there if you can count this trend line going up. Still has all the moving averages to eat through here, but I think definitely on Monday, odds are highly favored towards natural gas going up. And FCG, our natural gas ETF, is down 0.7% for the week. So got through this first red line right there. So back here where we missed it by a couple pennies, came through and hit on Friday of last week. And then it looks like your yellow line, no, seriously? It looks like it got missed by a penny. Okay, well now is probably fine. This goes with the old adage, whatever my limit order lines are here, add a nickel and it'll probably hit. Okay, so next week we've got Lobo Tigre, already mentioned that, and we've got Charlotte McLeod coming on the show. So be sure to get your questions in, and you're asking, Steve, how do we do that? Well, sign up for the free newsletter on Substack. Just enter your email on the website, and you can sign up for your free newsletter on Substack. And basically what you get is you'll get my best ideas for the week. And, I put in some of my best trades and some of my best ideas, some arbitrages that might be in there that I see happening for the week. There's no spam. I'm not going to sell your email to some marketing company or anything. It's just you and me. And you can find all that at stevebartonmoney.com, or there's a link down below. All right, and thermal coal is up 1.7% for the week, so still see an intermittent ceiling here of around 117 or 120 or so, and a floor of 100 per ton. And met coal is down 0.3% for the week, still see a ceiling of 195, which we're almost at, and a floor of around 175. And our favorite coal ETF is up 1.6% for the week. So still looking fantastic. Premium subscribers are up almost 20% from early September. of our order right there. So far, this trend line is being obeyed and looking very bullish on the chart. So we'll see how this one irons out. Like limit orders at 20 bucks, 18.75 and 17.75. And platinum is down 0.2% for the week. Wow, very bearish looking bar there on Friday. Starting to get some widening volatility here. So let me get my little handy dandy drawing tool. Widening volatility here, looking like it's probably going down on Monday. Palladium is up 3.5% for the week. So when we made the switch from investing in both platinum and palladium after we interviewed Ed Stirk, and that's signified right here by this yellow arrow. And if I take the performance, I guess, or measured target of August 12th, I think it was, we can see that platinum is up 19, we'll round up, 20%, but palladium here is up, drum roll please, wait for it, palladium is up 33. So far, that seems to be a bad decision. We'll see how this irons out. But again, I'm in this one for the long run. You know, Ed said that platinum has deficits forecast until 2029, and palladium starting next year is supposed to go into surplus. So I would expect this trend to reverse here. But we'll see. Maybe that wasn't a good decision, but time will tell. All right, and the way to invest in platinum, or the easiest way, is with a mouse click using PPLT. This one is up 0.3% for the week. So we got a little bit of support here by this rising 200-day moving average. But if the commodity itself is going down, that little blue line there isn't going to mean squat. So I like being invested in this one. I like limit orders here at around 133, 125.50, and 117.50. Platinum divided by gold is down, well, platinum underperformed gold by 5.3% for the week. Platinum underperformed silver by 5.9% for the week. And yeah, I think these are historically cheap in relation to, you know what? I just saw something right now. Let's see what, pretty good eyes, huh? Okay, 61.8% retracement plus the 200-day moving average right there. Well, how could you play this? I guess you could sell some silver right now to buy platinum. That's how you would play this chart. All right, well, if you want to sell any like PSLV and buy PPLT like on Monday, that would probably be the play to make right there. That's pretty compelling on the chart. We'll see if it irons out. Heard it first here on In It to Win It. All right, the Bloomberg Commodities Index is up 1.5% for the week. So we got resistance right here at this white line right around 107.50. Support for first level entries right here at 103.50. And remember, we've also got the New Orleans Investment Conference coming up. I'm super excited for that. This is coming up just here in a few weeks. It's November 2nd through 5th. So I've already got my tickets, got the hotel room. The little lady and I are going to be flying out, already got our plane tickets. These conferences are also where I get a lot of the companies for the premium portfolio. So yeah, I look forward to being out there. I hope to see you guys out there. That's my favorite part of these conferences is I get to meet you. You know, I see all these comments with you know, behind the screen names and avatars and everything, and then when I actually meet you in person, it's the most rewarding part of the trip for me. So I really look forward to seeing you guys there. Link is down below if you haven't signed up. There's still time to go. And nickel futures still hanging around that 15,000 mark. Nothing new there. Still looks like the heartbeat of a corpse. And NIKL, this one is looking to me like we're probably going to get some rollover here. Looks like maybe a fund or something came into this. I mean, I hover over here, if you look right up here at VOL, that's volume for all the trading view guys. Hover over here, there's almost no volume on most days of this thing. You know, I mean, it's $15 a share, and you have days here where, you know, 7,000 shares, you know, almost nothing. And then boom, 750,000 shares. So that's probably a fund getting into this thing or them issuing shares. But does look to me like it's probably going to roll over when we look over here at the RSI and the MACD. See how the MACD goes up here in blue, and then we just start the red right here, and it crosses over that that yellow moving average, that's usually a sign that it's on its way down. So that would be nice. Would like to get back more into these. This one's up 0.8% for the week. And where are we? PICK, so this is the metals and mining ETF, is up 2.7% for the week. So is that right? Yeah, Friday. Yeah, okay. 2.7% for the week. Kind of same thing as nickel. See how the RSI and the MACD are just starting to roll over? We're getting a little red right there. So I feel pretty confident that, you know, in the next week or two, this one should be weaker. Maybe we'll actually get some limit orders hitting here, like 41.50, 39.50, and $38. And Bitcoin is down, what are we at? 7.5% today. I'm recording this on Friday evening because I'm busy tomorrow. But looking fantastic here. So we finally broke down here on Bitcoin, kind of convincingly so. How low did that get? That got down to 103,500. So looking pretty good to go lower here. See how it broke the 200-day moving average? We'll see if it closes the week below this 200-day moving average, which would be a pretty convincing break to me. So it would be nice to see Bitcoin get a super washout. I actually would like to take another stake in Bitcoin. Longtime listeners know my story with Bitcoin. I got in at $450 and then just never did it again. I would like to see a super washout sale in Bitcoin. You know, and there always is the what's the word? There is the black swan that I don't hear anyone talking about with all this AI and with ChatGPT and all this stuff. What if Bitcoin got hacked and they figured out how to break the blockchain? This thing would become useless overnight, and you know, there is always that case. I don't know. We'll see. All right. Well, thank you guys. I appreciate you being here. If you guys want to play a little more alpha, be sure to check out our premium service. You get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling, and you get to see the model portfolio in a PDF form. Remember, when you sign up, you are grandfathered in at this price. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.